Hey, good evening, associates. Welcome to our Fund My Home updates call. Today is March 20th of 2020. And let's get right to it. Let me introduce you to our host for this evening and our presenter, Mr. Charles Whitman. Charles.
How are you, Ken?
I'm good. How are you, sir?
Just pushed over the mute button for yourself, but just wanted to know how your day is. I think it's a great day for everybody at fundmyhome.org, especially what we're going to share tonight. So we got a great attendance tonight. I see we're peaking over 140 folks, and I don't think everyone else has got on as of yet. Some folks come a little bit late, but this is definitely something you don't want to be late for. Want to be able to open up the mic for another associate member, corporate trainer, very good friend, and also business partner of mine, Mr. Lawrence Bond. So, Lawrence, you there with us?
Yes, I'm here, Charles. I'm excited.
I know you are. I am also, and I'm sure everyone else on the call tonight is very excited to get this information. So we're going to invite later on. First, we're going to go through the actual video. So Carlos has prepared a tutorial video on all the specifics, so you can rerun that. But try and catch as much as you can tonight, folks. If you can, grab yourself a pad and paper. You know, anything that really comes out, sticks out, or something you're just not sure of, you definitely want to write it down while we're live and we're going through it. So we're going to go through the tutorial video that Carlos prepared just on this specific topic. And then we're also going to have the mics open. So basically, if everyone knows how to raise your hand, you go where, you know, the menu is, where on the bottom it says participants, share, video, and audio. So you definitely want to click on participants, and that lists everybody that's on the call. So what you want to do is click on your name, and they'll give you an option to raise your hand. That's just in case anyone doesn't know. I don't want anyone to get frustrated if they have a question. Now, it's very, very important, guys. We keep the questions topic specific. And if it's not topic specific, I think we're all adults. We need to know that we need to streamline this call because it could go into hours, and we don't want to do that to anyone. You can always revert back to the videos. You can always double back on some questions. But we're going to try to get to everyone on your questions. So if we streamline it, specific and direct question, don't have to tell, you know, Lawrence how great presenter you think he is or this or that. We'll leave that for private conversations. You can always reach Lawrence at fundmyhome.org, Ken at fundmyhome.org, and me, of course, Charles at fundmyhome.org. But we also have the Facebook page, so you can ask questions there, get your questions answered by other experienced associate members that know the answers. So we really got a good support system. And so without any further ado, so Lawrence, I mean, we've come a long way. I mean, you remember when we first started under Buyers Navigate here, we had only 5 sections. There were no videos. And I think when you came on, or when I came on, it was $300. And I didn't get the bumper sticker, didn't get the t-shirt or the Doodles video. So now we're just evolving to where we're making it better for everyone. We want to have better communications. We want everyone on the same page because we are fundmyhome.org, and we're the ones who are going to be creating a housing movement. And now with the collaboration with USDA, it's just going to be incredible. What do you think, Lawrence?
Yeah, I mean, I'm in total agreement, Charles. In the beginning, when I came in as well, it was close. It was actually $300, and now we give you so much more, and it's only $49. It's affordable for everyone to not only change their lives, but participate and change the lives of others. Our mission statement of 1 million homeowners over the next 30 years with the professionals, associates we brought into the business model is going to be met, and it's going to be met a lot sooner. And we also added the university. I mean, the fundmyhome.org university back office is phenomenal. All the educational tools you need, everything is step by step, follow the dots. And if you're serious, you really will have success and you'll make a difference on the planet. So in terms of all the things out there, I think this is one of the best things in the marketplace because we're helping people with one of the main focuses is home ownership. And that's what people really need to get pride, to get equity, to have a legacy for their family. So we're giving a lot of folks hope, especially with all the stuff that's going on now. We have something that we can focus on that's bringing light where the appearing of darkness shows up. So let's get going, and I'm excited about everything that's happening. It's just getting better and better, Charles.
Absolutely, Lawrence. And, it's always said there's a lot of cliche words. You got to fail your way to success. Success is still full price. There are no shortcuts. So, those who are serious, I want you to personally project yourself at earning six figures and up. So, there's a possibility of seven figures for a lot of folks out there. And I think it may even go into eight. We don't know how high we can raise the roof on this one, because we're talking about very lucrative payout, and we're talking about a common factor. People all across America, if you gave them the choice, would you continue renting the rest of your life, or would you have an opportunity and a window to be able to create home ownership for yourself? And with what we've done thus far, just the things we've done, we should be doing a lot better. We should have more submissions. But the thing is, as time goes by, we're going to have all the key people that we want, and those are the people who are going to be the high earners. Money isn't everything, but even if you did your limited amount of effort to just really share this out and let people fall where they may, their criteria is going to be their criteria. At least we went through the process and checked, and if they do qualify. But with this new game changer, with partner up in collaboration with the USDA, I mean, we're talking about, and I'm not even going to get into it. Right, Lawrence? Let's just leave that for Carlos, and let's leave that for the overview, and leave that for you guys to discover for yourselves how powerful this is going to be here moving forward. Right, Lawrence?
Yeah, and the good part, Charles, there's so much more yet to come. I mean, when I came into the business and I, had a chance to chat with Carlos, he mentioned some things that he was looking to do, and I put him in, kind of in the back of my mind that, okay, maybe one day, and he'd call up and say, by the way, that first phase is done. I said, the first phase, remember when you came in, I told you this is what we're going to do? And, you hear things, as you mentioned, people say things, but you don't really see it coming into fruition. And I said, oh, are you still working on it? He said, it's done. It's done. So everything that he's mentioned early on that really got me excited, the short time I've been in, I'm seeing it come to pass, come to pass. I kind of forgot about it, but Carlos never took his mind off the prize, and he's making it better and better for us as associates. But more importantly, the passion that he has to help individuals experience home ownership is coming to the forefront. And I can tell you this, and I know you agree, Charles, 2020 is going to be our year of branding. Everybody will know who FundMyHome is and the great work that we're doing. So I'm excited about that as well.
Okay, absolutely. And, we don't blame the folks that kind of grabbed a seat on the fence and everything. We welcome you back. Hopefully we have more for you to grab some traction with. And I think tonight is really going to give you that traction you need to say, you know what, now's the time to make the full commitment of fundmyhome.org. So even Carlos is never discounted. His attitude was more or less like, look, we don't have it 100% together, but we will. I always say, just because I go like this doesn't mean I don't get there. So all you have to do is hang in the game. Basically, when business, kind of business structures come along, no business is at its peak. It's always an evolutionary platform that they're going from the next platform to the next platform. And what we're looking to achieve at its pinnacle is really offering a true home ownership opportunity where anyone can come on board and get qualified. And, we can't probably say everyone, but most folks. So I'm really, really happy and excited to introduce the rest of the segment we have this evening. So let's just roll on to it. We're going to play the video. If you don't get it all in one grasp, we're going to break it down in some bite-sized pieces. We're going to introduce Carlos right after the video, and he's basically going to go over every segment, and then we're going to open it up for Q&A. All right, guys?
So one more thing, Charles.
Absolutely.
Guys, if there was ever a time to build your business, and I think Charles would agree, the time is now. When you see what we have unfolding, this is the time to really get your group together and start building your business, and it's going to pay dividends that will take care of you the rest of your life.
Absolutely, 100% agreement with that, Lawrence. All right, without any further ado, let's take us through the video, please.
FundMyHome.org. Associate Member Success Training. Fund My Home, USDA. Key benefits. What makes our FundMyHome.org USDA 100% financing, payment subsidy, and closing costs assistance for new construction so different and attractive? 3 credit trade lines. Credit supplements and rental history counted as 2 trade lines. 30-day approvals. 2.75% fixed interest rate. and 38-year loan terms. Close within 7 days of signed purchase agreement. Close with zero out-of-pocket. Closing costs and prepaids reimbursed. For items such as appraisal, 1 year of insurance. Earnest deposit. Taxes and insurance escrow. Fund My Home leveraged loans, up to 50% loan to value. No minimum credit scores required. Streamlined credit analysis with 640 credit score. Mortgage payment subsidy. No application or broker fees. No mortgage insurance and no reserves required. First mortgage payment due 30 days after occupancy. Omission of payments from debt-to-income ratios when less than 6 months remaining. Real estate agents welcomed and earn full real estate commissions. First-time buyer. Owner-occupied residential properties up to 2,000 square feet. Purchase price of new construction, maxed at county loan limits. Non-taxable income grossed up to 120%. 100% payment shock. Purchasing power increased by 20 to 100%. 3 credit trade lines required. Trade lines must be 24 months or older. Traditional and non-traditional credit trade lines accepted. Examples of non-traditional trade lines are phone bills, cable TV, internet, utilities, insurance, child care, school tuition, local retail stores, payment arrangements for medical bills, bank saving history resulting in 3 months reserves. Rental history counts as 2 trade lines. Non-traditional credit accepted when less than 3 traditional trade lines or no credit history. Non-traditional credit cannot be used to offset derogatory credit history. Verification of rent or mortgage is required when credit scores are less than 640. 30-day approvals. Applications approved within 30 days of applications. No pre-qualification letters. No pre-approval letters. Home buyers receive full loan approvals. And certificate of eligibility, known as COE. Then, home buyer selects lot and home design. Close in 7 days of signed purchase agreement. The following closing costs and prepaids such as appraisal, tax service fee, earnest deposit to seller, property taxes, and homeowner insurance escrow. First year of homeowner's insurance premium can be included in the mortgage loan. FundMyHome.org can issue a leveraged mortgage loan. Up to 50% loan to value. Applications can be approved with low or no credit scores. 640 credit scores receive streamlined approvals. As long as the applicant is not delinquent or defaulted in a federal loan, child support, federal income tax, or show up in the do not pay list. The USDA can provide a payment subsidy when necessary. FundMyHome.org can also provide a payment subsidy when necessary. This program welcomes licensed real estate agents to become associate members and earn full real estate commissions and receive associate member marketing fees. In summary, due to the acceptance of low credit scores and no scores, non-traditional credit trade lines, payment subsidies, the waiver of 3 to 6 months PITI reserves, the Fund My Home USDA new construction program will result in increased approvals for greater homeownership opportunities. Additionally, the longer 38-year loan term, the lower 1 to 2.75% fixed interest rate, and the waiver of mortgage insurance will result in a 20% increase in purchasing power as compared to an FHA loan, and a 60% increase in purchasing power as compared to a conventional Fannie Mae loan, and in some cases, a 100% increase in purchasing power when Fund My Home holds a 50% lien position. All this while the total debt-to-income ratio is kept affordably under 41%.
So, guys, we're going to break this down in some bite-sized pieces. So Ken's going to keep the key benefits up on the screen. So if you want to reference your questions on each individual area, that'll make it easier. So we can have a good, nice sequence and workflow on understanding. So without any further ado, we're going to introduce our CEO and founder. He's going to basically break everything down in his sense of the word, and then you're free to ask questions, and we'll give you the answers that you need to be provided so you can have some clarity on how powerful this is. So without any further ado, we'd like to introduce our CEO and our founder of FundMyHome.org, Mr. Carlos Berrettini. Hello, Carlos.
Hello, Charles. Good evening. How are you? And good evening, everyone. It's a pleasure to be here, and I'm very excited about this announcement with our arrangement with the USDA. And this we do to open up all the markets and increase the probability of home ownership. And also, as you hear, to now allow realtors, real estate agents to work in Find My Home with their buyers, earn a full real estate commission, and also receive FMH marketing fees. So this works in many, many levels. But we're very excited about it because in this arrangement, we package, process, underwrite, and approve and fund the transactions without middlemen, without the bank. This is a very important thing because we don't have to bend their opinion or approvals. So this is very, very important. So things take about 30 days for an approval, but that's what it takes anywhere. In every single type of loan in the US takes about 30 days to approve. But the difference is that we will approve it first. So not a pre-qualification letter or pre-approval. We get a full approval, which is called a certificate of eligibility. So in other situations, when we deal with Fannie Mae, for example, FHA, VA, when we deal with
You're cutting off, Carlos. If we could check your audio, give us a test, 1, 2, 3, and then I'll give you okay. We can hear you good on the other end. Carlos, are you there?
No, he's muted and I can't unmute him now.
Okay. All right, Carlos, if you're there, if by mistake you hit the mute button or anything going on your end technically, can you see if we can straighten that out?
There he is.
Okay, Carlos, are you back with us?
oh, I'm back. So okay.
Great.
So
Yeah,
where
just
did I
make
live?
sure our audio is good. If you could talk a little clearer in the mic, and we'll monitor to see if you phase out. We'll just let you know. Okay, please
Okay,
continue.
all right. Okay, so where was I that I lost you? So okay, so I was speaking about what we get for now. We get full loan approvals, which is important because in uh, one of the challenges is once you get a pre-approval from Fannie Mae, for example, from a DU desktop underwriter, then you have to process it. And sometimes things don't go right. But in this case, we will have the transaction fully approved. And then at that point, then we enter into the purchase agreement and close. The transaction can close within days. So this, what it does is it allows to predict and to control the flow much better. Now, as far as the eligibility is concerned, as far as the 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 increased likelihood of approvals has to do a lot with how the transactions are underwritten. So, for example, right now and under this arrangement, there are really no credit score requirements. So, in the case that someone has a 640 credit score, then you get basically a streamlined approval as long as there is no known default loans on a federal loan or somebody in the do not pay list, then the transaction is approved according to their debt to income. But other than that, if there is a low credit score or no credit score at all, the transaction can still be done. So we were saying that this will increase the likelihood of more approvals, a lot more approvals. But when it comes to the purchasing power, when we mentioned that it would increase it 20% over an FHA loan, it has to do with their lower interest rate from 1 to 2 3/4 interest rate, the longer 38-year term and also the waiver of mortgage insurance, which is very, very expensive. But not only that is very expensive, but uh, the conventional loans, they depend on the approval of the insurance carriers. So, so if the insurance carrier does not approve mortgage insurance for a buyer, there will be no closing. So this, by not having a requirement of mortgage insurance, this also increases the likelihood of approval, but at the same time increases the purchasing power because eliminating the very expensive mortgage insurance, it reduces the debt to income, increases the purchasing power. So we were saying that that will increase about 20% over an FHA loan, about 60% on a conventional loan. But when we mentioned an increase of purchasing power up to 100% is because in such cases where someone qualifies for, say, $100,000. Let's say that the house is worth 200,000. Well, in that case, fundmyhome.org can step in with a 50% loan to value mortgage and close the transaction. Now, meanwhile, the home buyer gets qualified at their $100,000 purchasing power, but they are purchasing $200,000 home. So this is very important because of the high prices of homes. So we won't, as we have been receiving applications, the the challenges are both income limits and then also high debt to income ratios, which is the biggest killers of all loans. We've been saying it is the high debt to income. So people have their incomes and they have their debts, they have their dual card payments, their credit cards, and there's nothing we could do about that. That's how they come. So when you calculate, then they only qualify for 180, 150, 175, 200, and the properties are worth 250, 300, 350. So in this arrangement, the USDA will go as high as they can, and then we can pick up the rest. So basically, we have the ability to almost close everyone we want, everyone we want to help. And that's why we're here. We're here to close just about everybody. So this is very important. Now, the interesting thing is that we have the ability to go in first lien position, second lien position. We have a good arrangement with the USDA to allow us to come in first or second if we want to. But it depends on what we do with the interest rates. So, for example, if we decide to have the interest rates at zero, having a monthly payment, then we can go in on first position. If we decide to defer the payment, having a silent mortgage with no payments, then for some reason we have to go in second position. But either way, I think that um, that's a decision that we have to make. But either way, the the loan, the funds will carry no payment. So if somebody qualifies based on income of 2,500 a month, they're not going to have a burden with us because we have another $100,000 mortgage on them. So now some of you might be saying right now, okay, so I thought we do non-repayable down payment assistance. Yes, we do, but when it comes to having a large mortgage of that size to make the deal happen, then Fund My Home will have to have a lien position on the property. But a position that is comfortable, that doesn't require uh, the rest payment. It's just be a lien for the duration of how long the person lives in the home. So it's not going to be forgivable, but it's going to be sort of silent. So with that, that is the our focus is to go on with the USDA in their new construction initiative, and our company will then begin to build anywhere in the United States our own brand. So we will deliver homes that we have our own designs, our own technology, our own architecture, and the home buyers will then have data of all the lots that are available in the country. So they will simply recognize them. So let's say that somebody lives in, I don't know, say in Waco,
Arizona?
Texas.
Okay.
Waco, Texas. Thank you, Charles.
Mhm.
So that person most likely grew up in that town, went to school in the town, works there, the children are there, the family are there. So that family is very likely that is very familiar and very comfortable with Waco, Texas. So they will be able to look at the data of lots that are available and know that that's where they want to live. So all they have to do is take a drive by and say, okay, I do like the neighborhood. I know the neighborhood very well. And so they select it. We then continue forward with the approval. And once it's approved, then we move on to the selection of the well, the selection of the lot will have to be selected by means of entering into a purchase agreement and then selecting the design of the home and the day of closing. And the closing can happen within days of the signed purchase agreement. The day of closing, the home buyer receives title to their lot. And all we have to do is complete the construction. So that's how it works as far as that. So the closing is a full closing, meaning the home buyer owns the lot, gets title to the lot, and now is under contract with a builder to finish the home. And that, uh, according to our technology, it should only take only about a couple of months to finish. So that's how it works on the construction part. It's a way for us to have a more predictable outcome by knowing exactly, excuse me, by having a complete approval and not something that may turn out to be a roller coaster. So with this, realtors can come and bring their clients. They get paid a full real estate commission and participating in fundmyhome.org as associate members, they receive marketing fees. Okay, so now what what this does is gives everyone the opportunity to override realtors for what they do. Now, our company will, with this, most likely become a very powerful real estate company. And our associate members will be overriding and getting paid as recruiters. So just like any real estate company, real estate companies have recruiters, and the recruiters get paid for the volume that is brought by their realtors that they recruit. So we would pay a flat fee, and we continue the model of not having to be licensed. You can be a recruiter and not need to be licensed. So today is a good opportunity to grow your business, to tell everybody about fundmyhome.org and grow with our company because this is for a long term. This is a good opportunity. As we say, share share this opportunity with everybody you know, everybody you meet. So if anybody has any questions, I can answer the questions now. But this is basically the gist of the program, Charles?
Great. Thank you so much. Thank you so much, Carlos. And this is really powerful, guys. So, it's great that you're on the line tonight to get this information firsthand. So the way we're going to proceed is that, Ken, you're going to call out the hands that are up. And again, guys, let's do this program and nothing more. Okay, so this way we can streamline this and we can give everyone a chance to get their questions answered. So I'll turn it over to Ken, and we'll just call out those who have their hands up.
Great. Thank you, Charles. Hello,
Ken?
Carlos. How are you tonight?
I'm great. Thank you, Ken. Thank you. How are you?
Great. I had one question for you before we get started. I had heard somewhere in the last couple of weeks that the $120,000 might be moved down to the minimum purchase. Is that correct?
Yes. Well, the arrangement is a minimum of $60,000.
Very good.
Yes.
Okay. Let's take some calls. Linda, I have you unmuted. Go ahead and talk with Carlos.
The USDA program is only for new construction?
This program that we have with the USDA, in the way that it's described, is a new construction initiative. Now, the USDA and this arrangement with fundmyhome.org works independently without the bank. So this is where we package, process, underwrite, approve, and fund without the banks. So this is going to give us a lot of flexibility, a lot of range of movement with transactions, and have a much higher rate of approvals. The USDA, when it comes to outside of this new construction initiative, will be a part of our normal program, which is our program, which is follow the process, which you go through the calculator and you upload your documentation and you pick a home that is inside of a USDA area. But this will be a home where that is existent for sale in the MLS by a realtor, or well, it has to be listed, and it's for an existing home listed for sale in the MLS. This will require to go through a bank, to go to Bank of America, through a mortgage wholesaler. That is one of our original programs. This, what we speak about, the construction initiative, removes the bank and enhances our ratio of approvals, purchasing power, etc. So what we spoke tonight is only about new construction.
All right. Thank you, Linda. Let's go to Marty. Marty, you're unmuted.
Yes, hi. I had two quick questions. One is, used to be that $85,000 or $86,000 minimum income earning requirement. Has that changed? And the second question is this restricted only to first-time buyers?
Okay, well, thank you. So the income, the $85,000 income requirement is only being a requirement for when we pay for the TV commercials, to ensure that the investment is wise. So when we do the TV commercial, the operators, the TV production inbound calling center, they ask questions such as income has to be a minimum of 85,000. They ask eligibility questions to ensure that we're getting a good prospect. And of course, we're speaking about W2 only, and there was a couple of other questions, but that has nothing to do with this or our program. In our program, in none of our programs, there is an income minimum requirement. The 85,000 was only for receiving leads from the TV conversion company. Now, as far as your question of first-time buyers, the USDA does have a a requirement that people must be a first-time buyer. First-time buyer means that they haven't owned a home in the last 3 years. So someone could own a home 4 years ago, and that qualifies them again as a first-time buyer. So yes, you're right about that. First-time buyers only, which is the majority of our home buyers.
All right, thank you, Marty. Let's go to Gene. Gene, what is your question?
Yes, my question is, with this program, will that mean all the states are open for this program? And then my second question is, with the other program, is it still only Texas and Florida that is live?
That is, you're correct in both questions, yes. We can do all states now with this new construction initiative. And so far, we do Texas and Florida with the other. But with this gives us now the opportunity to open and to continue to accept applications from the other states for both programs.
Great, thank you, Gene. Let's go to Wilhelmina. Wilhelmina?
Hi, thank you. Carlos, now that we're going to be open in all states for this particular program, how soon will the realtor that brings the buyer to the program, how soon will that list be made available on the available sites in the area that the person may be interested in?
Which list?
The USDA site, you know, like where the construction sites are?
Oh, the data for the lots, right?
Yes.
Okay. Well, there's a lot of complexity there, and we're working on it right now. Nevertheless, someone could come in and volunteer that lot already, so a lot that they already know, or a lot that they can find on their own. We are not being exclusive, but we are developing a program where it makes everything streamlined, all the information available for anyone. So someone in the middle of the night could be saying, okay, I want to move to Amarillo, or I want to move to Chicago. Well, Chicago wouldn't work for it because it's not rural. And they'll be able to look at the data and just look at pictures and aerial pictures and know the area. But if somebody already has a lot, then they can bring it forward, and it will eliminate that step.
I was looking at, previously I was looking at some USDA approved areas, and it's hard to find some in Florida. Is there any way we can get a map that shows the zone areas for USDA?
Sure, you can. So you will go to the USDA property eligibility map. And once it opens, you'll see that the map is mostly light gray, white color, and all that is eligible. Then you'll see some small spots that are orange in color, and those are what's not inside of a USDA. Now, for example, South Florida is not, or some parts of Orlando, most parts of Orlando is not, but most of Florida is rural, most of it. So I'm not sure if you're doing the search correctly, but most of the United States is USDA designated area.
Great, thank you, Wilhelmina. Let's go to Joe. Joe, what is your question? Joe, are you there? Okay, let's move on to Bildaya. Bildaya, are you there?
Hello?
Yes, go right ahead.
Oh, good. Hi, Carlos. This is Bildia. I was just wanting to touch bases and let you know that we really appreciate all the work that you're doing for everyone here present, and for the ones that don't know that you're working very hard for them, but they soon will be very grateful as well. So I have a group of people here in Utah who are very excited about everything that you're doing. And we're just hoping to be of help and trying to see if we can get this going over here.
Well, thank you, Bildia. And you have been a great help, Bildia. You're very modest, and I appreciate you very much. thank you for all your work. Belia is quite a very helpful individual. She is very generous with her time. Thank you, Belia. Yes.
Okay, let's go to Sandra in East California, I believe. Mic is unmuted.
Yes, I had a question. You were saying that you picked a lot and then you close the deal on the lot and then you can pick your construction. So is that another loan that you get for the new construction, or is it all together? If you can clarify that.
Well, yes, of course. And this is very important because typically, when you get two loans, when you get a construction to permanent loan, there's a lot of room for blowouts. So the house is constructed and then you have to go to the closing. This is how it happens everywhere. There is a construction going on and a loan going on for the construction. Then the day of the closing, when they deliver the home, then you have to go to the title company and close. And sometimes things don't close. And when those things, loans don't close, people lose their money, their deposits, and their home goes away. In this situation, there will be only one loan approval, one loan closing. And the closing will take place a few days after the purchase agreement. So the loan is approved, move into selecting the property, the lot, the design of the property, agree to the purchase price, and close. When that closing takes place, it's fully closed. All the money is available. So it's closed, including receiving title to the lot. So at the day of the closing, the home buyer receives full title to the lot with a lien, of course, and then the the construction begins. But there is no possibility of blowout. You could consider the home yours.
Okay, let's go to Kathy Persal. You're unmuted.
Hi, can you hear me?
Yes, go right ahead.
How you doing? I'm a real estate agent here in the state of Nevada. My question is, when I sell a house to my buyers, it is not my decision for them not to get title insurance. Why is there not a title insurance? Because that was a red flag for me. If I cannot get my title insured, to me, maybe the title is cloudy. That was one of the questions I had. My second question is, how many, do you have any testimonials from other buyers, and who is the title company that we would be dealing with? And you guys would be in the first position, and you would, and not, if I'm purchasing directly from FHA or Fannie Mae or VA, why do I need you guys to be on the title?
Okay, so thank you. So there's a little bit of a misunderstanding. We never mentioned in this conversation and tonight anything to do with title insurance. We simply mentioned one of the good benefits and good features is that there is no mortgage insurance. So no mortgage insurance means that there isn't a large insurance carrier needed to approve a transaction. So if this is the source of the confusion. So when you have a transaction through Fannie Mae, any bank, if the mortgage insurer does not approve the mortgage insurance, there will be no closing. Of course, that's all done behind the scenes. In this case, there is no mortgage insurance. So the likelihood of approval increased greatly because there isn't a third party overseeing the operation, especially the insurance company. So that's why that's gotta be the only source of confusion because we didn't speak of title insurance. When we spoke about title is the day of closing is a full closing, a complete closing. So means that the day of closing, the home buyer has full title to their lot. They are the owners of the lot. Now, so that's the really what we do here. We're not saying not to a title insurance. And the title companies will be many title companies. We are not going to just work with one title company. And so I hope that answers your question. But you have very your questions are important. But let's go on with somebody else.
All right, thank you, Kathy. Let's move on to Lily. Your mic is unmuted. Hello, Lily. Are you there? We'll mute her and move on. Let's go to Frank Brown. You're unmuted.
Yes. I'm one of the ones here in Texas.
You've got your speakers on?
Okay, that better?
Yes, sir.
Okay. I'm here in Texas. What about a person that's, say, maybe wants to get a half acre or acre and put a mobile home on it? Would that include the cost for getting a septic tank and a well and all that included, or do you have to do a new construction from the ground up?
Good question. Good question. Okay, so there is no restriction on the size of the land of the lot. No restriction. Now, Fannie Mae does have a restriction. They don't want to do anything more than 5 acres. Here, there will be no restriction on the size of the lot, as long as the lot is not subdividable. So you can not subdivide. So if you have a lot that is 10 acres, it has to always remain as 10 acres. Or if it's got it for an acre and a half, cannot be subdivided. So no restriction in size, but cannot be subdivided. As the other question, the services of the lot, the improvements, the sewer, the electric, the all that is included in the loan. So the lot will be just a piece of dirt, some grass on it, and it will be turned into a lot with services, plumbing, electrical, etc., sewers, and everything completed. So that will be coming out of the loan, not out of your pocket. Now, talking about that, it's interesting because we're speaking about how much is out of pocket. None of that will be out of pocket. All that will be included in the loan, not your financial responsibility. But there, of course, that there are certain things that need to be paid, and you will be reimbursed at closing. So, of course, appraisal. See, the bank, no one will come up with money up front for you. So, to get a transaction approved, there has to be an appraisal report. So you put up the money, but that will be reimbursed. You will be reimbursed even the full 1 year of homeowners insurance that you have to pay up front to bring to the closing table. And that can be included in the mortgage, but of course you have to bring it already paid off. And in some cases, we can actually have, if you bring a binder, we can pay the insurance company at closing if you were able to procure a binder from them. And it's not difficult, simple stuff. So the first year of escrow, the prepaids are also included in the loan. So your prepaids, meaning your escrow for your insurance and your escrow for your taxes, it's also financed. So literally, you come into the closing with zero out of pocket. Any other questions?
Yes, thank you, Frank. We're going to iPhone. You're unmuted. If you give me your name, please.
You can get on the Uber and help me.
Okay, we're going to move on to Paul Browning. You're unmuted.
Yes, thank you. So does that mean that you are now looking for more agents nationwide to be able to do this particular program?
Well, look, we are open for everybody. And as you know, we say that this is for the people, by the people. This is open for everyone. Here, you don't have to be licensed. This is to share with your peers, to share with your coworkers, and everybody you know. So it's open. But what we're saying is that this now allows licensed realtors to participate, bring their buyers, get paid a full commission, and still get paid a fundmyhome.org marketing fee. And you, the reps, override the growing number of us of realtors that can come to Fund My Home nationwide. So you're going to be overriding a lot of people and becoming a true part of a very large real estate company.
All right, thank you, Paul. Let's go to D Street. You're unmuted.
Hi, can you hear me?
Yes, go ahead, please.
Okay, great. Yeah, I'm piggybacking. I was going to resend my my inquiry, but it's kind of piggybacking on the last caller in reference to the real estate agents. So, if real estate agents who are currently licensed in with any given agency in any given state, just let me, for clarity, know if this is correct. That those real estate agents can now conduct business as a Fund My Home associate in any state. Is that correct?
That is correct.
Okay, thank you, Dee. Let's go to who has a Samsung Galaxy. If you could give me your name, please. I'm unmuting you now. Samsung Galaxy. And
Yes,
go right ahead, please. What is your name?
Vivian.
Okay, Vivian, what's your question?
My question is the builders. Who are the builders?
We're going to make that information available for builders. And of course, any builder can come through and join this effort. And this is a part of your sales aids video where we say we work in collaboration with major builders, etc. This is all part of a company theme. So if anybody has any builder that they would like to they would like to work with or we will entertain that every time.
Great. Thank you, Vivian. Ronald Satter, you're up. Satterfield.
Carlos, hey, it's Ron Satterfield. Congratulations again, and thank you for giving this opportunity to us.
Thank you, Ronald. Thank you.
Good. Just one simple question for associates. On our qualifying that we do with clients as associates on the calculator, will those factors be changed now? It seemed like it was based primarily on FHA with 3.5% down payment. Will all those factors change, or will we stay pretty much the same as we've been accustomed to doing?
No, this is different. This is where we say, when we say follow the process, we mean that with the current programs. But this is different because the ratios are different. The way of looking at credit is different. The way of looking at income is different. The way of looking at the properties are different. Everything changes. So right now, for anybody that wants to purchase a home in the USDA area, then they will have to go simply directed to our counselor. So there will be just that. If the property is inside of a USDA area, you have to follow a different process. So it's not the same as we have now. Thank you, Ronald.
Great. Now we have Lawrence Bond. Go ahead, Lawrence.
Okay, very good, Ken. Getting more and more excited. Carlos, I got two questions for you. Number one, is there a range in terms of square footage for the properties that we are building? And will there be models that the potential home buyer can see? So that's question number one. Question number two, once that potential home buyer purchases that lot, and that lot now is their lot, and that's considered a close, does that mean that associates will now generate their marketing fee that much sooner?
Correct. So just one second, please. Give me just a moment. Hang on a second.
Carlos, did you mute yourself?
Yeah, it looked like he's muted. So
Yep.
give him a moment to.
There he is.
Okay,
Back.
I'm unmuted. Okay.
All right.
So the question was the range of size of square footage. So the square footage will be up to 2,000 square feet of living space. That's the size of the properties. When the home buyer enters into a purchase agreement, that's when the associate members get paid. So the same as we do it. So it's not based on a closing or based on a purchase price, so that we can continue to pay you marketing fees and not commissions. So somebody comes in, we give them an approval, and now they select the property, they select the design, and then the close. But they do close, but of course, you don't get paid after they close. You get paid. You are due your marketing fee at the time of signing the contract.
Right.
Okay, let's go back up here and let's go to Eloise's iPad. Eloise, are you there, please?
I am. Can you hear me?
Yes, ma'am.
All right. Thank you. Carlos, thank you. This is just so exciting. I can hardly stand it. I have a question on, I'm in Texas. A lot of manufactured housing is done here in Texas. So my question was, when a buyer selects a lot and they close on it, how does that work for the purchase of the home? Because a lot of the homes, when they go to a dealership, they're looking at a home. So they say, well, I like this home. So then the dealership orders that home and has to be built. A lot of the dealership that I approached a while back said, how would that work for us in terms of getting paid if we were to work with you and send you clients? How would I answer that question?
Well, thank you. Well, thank you for your question. We don't consider buying a manufactured home a new construction. So in the case of what we do, we will build you a high quality home that is a true home, not mobile, not pre-manufactured or modular. It will be a full construction. The USDA, if somebody wanted to purchase a double wide, because we're not doing pre-manufacture, we're doing double wides only when it comes to that kind of property. But that will have to fall into a regular program, which is going through a bank and not directly with us independently of banks. So that would not be considered for us new construction.
Okay, thank you, Eloise. Now we're going to go to Rashon Nicholson. Your mic is open.
Yes, hello. Question. Thank you. Hi, everyone. It's in regards to support. Doodle, it happens to have a different ID number. I contact support, but just kind of want to know what method I can go about getting that addressed.
Okay, well, thank you very much. You could do simply call them at their Monday through Friday, 9 p.m. to 4:30, excuse me, 9 a.m. to 4:30 p.m. Eastern, and they can help you with that. Or you can send them an email to support@fundmyhome.org and be able to help you that in very quickly. And so the reason for the different number has to be in the way that you register yourself initially, but that's fine. That can be changed anytime.
Okay, thank you. It's 10 o'clock. We have quite a few more hands up. Carlos, if you'd like to continue.
I can, if
Very
we could just satisfy everybody's questions, sure, of course.
Okay, and let me remind our associates, these are topic specific to what you're hearing tonight about the USDA program. So please hold all your other questions and send them to support@fundmyhome.org. Let's go to John P. John, you're unmuted. Go ahead, John.
Yes, can you hear me?
Yes, go right ahead.
Okay, great. Yeah, I just had a question in reference to the opening up of the different states other than, of course, Florida and Texas. Is there any program in place to indicate how close a state is to opening up? If you 5 out or whatever, that seems to be a major concern with a lot of the states.
If I can answer that, Carlos, real quickly, there has been a challenge for all the states. You can find that information on our Facebook page, FMH Associates. The list is there for how many pre-qualified home buyers are listed, and you need 20, and then we send the list up to corporate, and they go from there. So thank you for your question.
Great.
Gene, we have you again. If you can make it quick, please.
Yes. As far as the this program, is it listed under our back office, or I know with you were saying with the map, you can find with the map which lot is under the USDA. So where do you find that map?
That it's not just a map. So it will be the actual data of actual lots that are available for sale inside of the areas that we can go to. So you're not going to just simply see a map, you're going to be seeing actual lots available, the information about square footage, prices, and the location, all that. So like I said, if you are familiar with the city, you'll be able to drive by and say, okay, perfect, this is awesome. Next to the church I like, next to the school, perfect, this is awesome. And simply, that's where you're going to build your home.
Now we have Julia Mortega. What's your question, please?
Oh, hi. I'm in Washington. Is Washington one of those areas where you can get a brand new house, a new construction? And my second question is, what if you already own the lot?
If you own the lot, oh, the answer to Washington, I'm sure that there is plenty of territory that is designated USDA. I'm pretty sure. And the answer to the question, if you already own the lot, then you could use the lot for down payment. Now, if you own the lot already, USDA will make you contribute the lot as your down payment. And I don't think that anyone will have a problem with that. But yes, the lot will be a part of your down payment. Now, you may own the lot, but may have no equity on the lot. You may only have the lot with a big loan on it. So then, same apply. So it might still go back to 100% financing. It might still go back to us assisting you with an additional loan. So let's go back to that about the additional loan. So someone doesn't qualify for the full purchase price, and the USDA says we'll approve it for 185, and you need 220 or 275. We will give you the difference. If the amount is substantial, we will give you the difference with a lien. With a lien that has an interest rate that will not be greater than the USDA at 2.75%, but could be zero interest rate. Okay, next.
Yes, Sorrel, go right ahead.
Yes, good. Hello, Carlos. How are you?
Good, thank you, Cyril. How are you?
I'm doing well. I have a couple of questions I'd like to ask. As far as the real estate agent, when they join, would that be the regular $49?
Same
And
thing.
okay, now the second question is I know that there's the program, the USDA program, that's going to be in conjunction with the present program that we already have.
No, it's separate, it's different. Because the one that we already have utilizes the intervention, opinion, and approval and funding of a bank. In here, there is no bank. So there is no dependency on the bank.
Okay, let's go to Rashan R. Rashan?
Hello, can you hear
Yes,
me?
go right ahead.
Okay, so with this program, there's no grant at all.
Well, there is a grant, but it's going to be our discretion. For example, someone earns, say, $2,700 a month. So, well, somebody earns 36,000 a year. So when you do the math, that's $3,000 a month of gross income. At 50% debt to income ratio, if you're making $3,000 a year, you're only qualified for $1,500 a month of payment. At 40%, you only qualify for $1,200, for example. That is if you don't have any bills, any car payments or student loans or things like that. So people who are making $3,000 a month are unable to purchase a home for $200,000 or $300,000. No matter what, the USDA or anyone will be able to give you a loan greater than what you qualify for. So somebody at $3,000 a month may qualify for maybe $90,000 loan, depending on how much consumer debt they have. But the house could be worth $250,000.
All right, Carlos, if you can hear me, you keep muting. I'm not sure why that is. And it's hard for me. There you go. You should be back.
I'm back. Okay. So this, it depends on how you look at it. There is no grant. If the amount of money that we have to give you is reasonable, then it will be given non-repayable. But if we gotta give you to help you with your homeownership dream and gotta give you $100,000, it's going to be given with the lien. But if we gotta give you 10, 15,000 or less or more, I mean, it all depends on how much it is. So yes, there still is a grant, but it's going to switch over to a lien depending on how much money you need.
Okay, let's go to Connie Schmidt. You're open.
Okay. I'm assuming, and I hate to assume, that this is only single-family dwellings. There wouldn't be any quadplex or any kind of a loan for that then, correct?
No, this will be for all types of owner-occupied properties, and that's fine. Anywhere up to 2,000 square feet, as long as it's owner-occupied. So it could be a duplex, a fourplex, or a single-family residence. It could also be a condominium, but then it gets complex because of the well, because of the condominium questionnaires, but mostly because, well, let me just go back to that. It will not be for condominiums because we are not going to build a condominium. We're going to build single-family residences, duplexes, fourplexes, etc.
Okay, Richard Marks, you're up.
Yes, if can you hear me all right?
Go, please. Yes.
Yes, if a customer qualifies, gets the loan, gets the house is built, is there a restriction on when they can sell that property?
No, no restrictions. There is no prepayment penalties or any restriction whatsoever.
Okay, next up will be Kraft. You're unmuted. Hello, Kraft, are you there? Moving on, we have Joe. Joe, your mic is open.
Yes, quick question regarding if a buyer wants to purchase with an existing development that with the builder that has a community development, is that do you need builder approval or can you just do your typical buyer financing through that?
Okay, so our position with builders when they have their own product is that 99.5% of all builder contracts have monies that become non-refundable, deposits and down payments, etc. So that's probably 99.5% of all contracts. 100% of all the contracts that we have seen from builders throughout all the years, all of them have been non-refundable. And this is why we don't get in the middle of existing transactions which have non-refundable deposits and down payments. So we don't work with any existing arrangement. So we will have to pre-arrange everything and make sure that in those contracts, there are no mentioning of any deposits or down payments becoming hard, non-refundable.
Okay, next up is Helen Ford. Go ahead, Helen.
Hi, thank you. Can you hear me okay?
Yes, go right ahead.
Okay, so the closing is at the time the lot is purchased, and then 6 months later or so, the house is built. So when does the borrower or the owner's payment start?
Okay, the closing is everything. So at the closing, you purchase the full product, the full constructed home. But at the day of closing, you receive title to the property and the construction begins. Your payment, your first payment is due 30 days after your certificate of occupancy, after you occupy.
Okay, we have Viviana Augustin. Go ahead, please. You're unmuted. Viviana. Next, we have Rick Roach from Minnesota. Rick, how are you? Go ahead.
Fantastic, Ken. Thank you. My question goes back to the bringing in realtors on this particular program. If I understood the original grant program correctly, when you brought in a realtor, they had to bring in multiple other realtors as associates in order to be part of the program. Is that correct? And in this program, if you bring in a realtor, does this realtor have to bring in other realtors, or can they simply go to a purchase deal?
They don't have that requirement. They can simply bring in a purchaser and they will be paid the full commission and participate on the fundmyhome.org marketing fee.
Okay, next up is Greg Jones. Greg.
Yes, can you hear me?
Yes, sir. Go right ahead.
Okay. My question is with currently licensed real estate agents, do they have to leave their current agency and become exclusive to Fund My Home in order to be in the program?
Not right now, immediately, but we are going to definitely go that way. Definitely, 100%.
Right.
Are you a real estate agent, sir?
No, I have some that were interested, but that was their holdup. They didn't want to leave their agency.
Well, okay, but let's take a look at that for a moment. So the benefit to all the associate members is great, very, very great. So you have building yourself a great career inside of a very big real estate company with a lot of people in it. So your job is of a recruiter. Your job is to recruit all their associates, including real estate agents. And for that, you get paid. How you recruit them and how effective you are is entirely up to you. We want them to come to fundmyhome.org. What we will offer them is we will honor them their contracts. If they have a contract for 80, 90, 75, 100%, we will honor it, whatever they got. But we will give them something that they don't have anywhere else. We'll give them the ability to give their clients a brand new home, whereas the facilities will be the credit facilities will be unmatched. So they can come here and work with us, help us with that movement, with our housing movement, and make a great living with us. And that's your job, to help them understand that.
Okay, next up is PGH Joe. Go right ahead.
This says for Pittsburgh, Joe, and we've been prospecting for clients who need a grant. And you said our primary job now is to recruit real estate. Are we still looking directly for people who would like to have help buying? And if so, would the first question be, are you interested in a rural area, or do you want to be in a metropolitan area? Is that correct?
Yes, correct. So no, well, your primary job is really home ownership. So you want to promote it to home buyers, to your friends, to your neighbors, to your coworkers. You don't need to promote it to either. You don't have to recruit anybody here. You don't have to have an associate member to be able to help somebody with a home. You don't have to recruit a realtor either. But this is just opportunities. But you could just go straight to your cousin and help him to get his home.
Okay, let's go to Edwin Mallard. Your mic is open.
All right. Yes, I have a question for the new construction. All right. So what is container homes open to new building construction?
I'm sorry, I didn't get the question.
All right. So what I was asking, can a person build a container home from?
Oh yeah, I understand. Like a shipping container home.
Yeah.
Yes, thank you. The USDA, I think, I did see some posters about in Virginia when I went there to their location. There were some posters about some shipping containers, some very beautiful homes. But we are not going to build shipping containers homes. But if we were a different company, or if we change our mind, maybe. But today, we are not going to build shipping container homes.
Great, thank you. Let's go to Mauro. Your mic is open.
My question is, how long does it usually take to build a house after approval?
Well, depending on permits, but after permits, you take only about 2 months. It's actually very quick. It's very it's a high technology construction, high quality, and very affordable. But when we say affordable, we don't mean low quality or small homes up to 2,000 square feet that will be very well priced.
Okay, we have Cedric Brown. Your mic is open.
Okay, hi everybody. Carlos, on the construction end, once a client says approved and say the building process starts, that money is getting given out in draws as the progress continues with the builder until it's complete.
Correct. Yes. So there is, but there is only one closing. So there is no risk of having a transaction that a home that got built or partially built and then it couldn't get finished. So all the money will be available, and then of course the builders will get paid upon draws.
All right, Helen Gonzalez, go ahead, please.
And but let me just say, just in case, so you guys remember, no one is getting paid after the construction is finished. Everybody gets paid up front. So all the associate members and the realtors get paid the commission up front, not when the home is delivered. So 6% of the realtor when signed, the contract is signed, and the associate member marketing fees when the contract is signed, not after the construction is delivered.
Okay. Helen Gonzalez.
Yes, good evening, everybody. I have a question as far as, did I understand correctly that there is no minimum credit score required?
Correct. There is no minimum credit score required or no credit score at all. Nevertheless, if the credit score is 640, then the transaction will be streamlined where there will be no further credit underwriting as long as the home buyer is not listed in the do not pay list. So 640, it will be a guaranteed transaction according to their debt to income. But the thing is, if the debt to income is, there will always be a loan amount, always. So you get approved for 60,000, for 250,000. But if you get approved for 60, for 70, for 80, and you need more, then this is when fundmyhome.org comes in and gives you a very large amount. And if it's large, it will be considered as a lien. If it's not too large, it will be a grant.
Okay, we have Margaret Umorin. Go ahead, please.
Yes, can you hear me?
Yes.
Oh, hi. I have two questions I wanted to ask. Will all the new information that you went over tonight be updated on our updated website? And
It will, yes.
okay. And then also, and the second question, I wanted to find out, when can we, expect to for the commercial to be aired? Possible.
Well, there is, we have to fix a few things yet that are not completed. And one of them is our actual system and website. So a few things we have to update, and then that's, it's coming. I can't say it, I cannot answer that question right now, but it's coming up.
Okay, we have Tony. Go ahead, please.
Hello, can you hear me okay?
Go right ahead.
Hey, Carlos, how you doing? It's Tony and Kay.
Tony and Kay, how are you? Thank you.
Just fine. We're very, very excited about this new program. A question I have about Fund My Home being the lien holder, how will it affect the payment? Is that considered two loans or combined in the just a one loan, house loan?
Okay, so if the USDA, let's say, approves the first mortgage based on, say, somebody earning $3,000 a month, so they approved it for a purchase price of 150, let's say. That means that you can only carry, let's say, a payment of $1,500 a month total complete payment, the housing and the consumer debt. So what that means is if we're going to give you the difference, because the house is worth 300,000 and we're going to give you 150,000, if we require that you have a payment, another $1,500 payment, then USDA will not be able to give you the loan because now you cannot carry both loans. So we will give you in that scenario the loan with all payments deferred. It could be deferred with 2 3/4%. It could be deferred, payments deferred at 0 interest rate. This is all going to depend on the financial stability of the individual, but mostly I would say that we will do them all at 0 interest rate and no payments due until the house is sold. Because otherwise you couldn't qualify because you have another payment to make, and then the USDA will rescind on the approval. Thank you, Tony.
Okay, Lily, you're up. Are you there, Lily? No. Okay, let's go to Evelyn. Evelyn, how are you?
I'm doing great. Can you hear me?
Yes, ma'am.
Great, thank you. Hello, Mr. Carlos. I got on a little late after the call, but I think one of the ladies answered the question. This here will be recorded so we can have later because I missed some of it. This is going to be a great program here with the USDA. Is it going to be recorded where we can listen to it again?
And I'll take that, Carlos. Absolutely, Evelyn. It'll be on the YouTube tomorrow. Also, I'll have a link on the Facebook page for everybody.
Thank you so much. Thank you.
And next we have Adrian. Adrian, go ahead.
Yes, hi. My question is regarding the loan terms. Once approved, can the customer refinance from a 38-year mortgage to maybe a 20-year or 15-year or shorter?
Sure. Once you could refinance at any time. You could go to any bank and refinance it. But it doesn't make any sense because if you refinance, you have to pay for closing costs. And if you refinance, most likely you're going to pay a higher interest rate than 2 3/4. And because there are no prepayment penalties, all you have to do is make a prepayment. So you're not, look, and the other thing to think about is that no one, according to the Department of Labor, the statistics, no one keeps a loan for 30 years. A few rare people keep a loan for 30 years. So you could have a loan for 30 years and only keep the loan for 3.5 years. So having a loan for 38 years shouldn't be any type of concern. Now, just to clarify, the minimum loan term is 33 years and could go up to 38 to increase the purchasing power, the eligibility. The interest rate is 2 3/4%, and it could go as little as 1% to increase the purchasing power as a payment subsidy. So I hope that answered your question.
All right, thank you, Carlos. We're at 10:30, and we have probably another 20 or more hands up. Did you want to continue?
Let's continue for a few more minutes, like 15 minutes, and we stop.
Very good. Let me bring on Lawrence. Lawrence Bond, you had a question?
No, actually, I'm good to go. Everybody's asking the question, so I'm just ready to make it happen.
We'll come back to you at the end of the call then. Thanks. Okay, let's go down to John's iPhone. You're unmuted. You there,
Hi, can you hear
John?
me?
Yes, go ahead.
Can you hear me? Okay. Question was, realtor standpoint,
what would, let's say I come on as a full-time agent with Fund My Home, what would be the commission split? How would that all work out?
It will work out. We're going to honor everyone's contract. So if you have a contract at 70% or 80 or 90 or 100%, we will honor that contract.
Okay, next we have Thomas. Thomas, go ahead.
Yes, a couple quick short questions. First, are our marketing fees going to be the same on this program as on the conventional program?
Yes, it will be the same.
That's the same. Okay, is this program ready to go now that we can start marketing tomorrow?
We still have to put together the data that we need, and it will be done. We're working on it right now, and we're going to give an update soon. But when we have that, then we're ready to go.
Okay, let's talk to Trench McElrath. Go ahead. You there, Trench? Maybe not. Okay, how about Juanita? Juanita, you're open. Nope, I guess not. We have Rick Panis. Rick, how are you?
Hey, good, Ken. How are you?
Good.
Good. Hey, my question was actually just answered. So one of the questions was, how soon will we be able to start using this program and in all 50 states? And two, are we going to start doing trainings on this particular program to get everybody up to speed on, so that they all understand how to submit a application on with this program?
Yes, yes. Both, yes to both, yes.
Okay.
I hear that song.
Great. All right, let's talk to Juanita. Juanita, your mic is open.
Hi, this is Juanita out of Florida. And I just want to clarify on the question in regards to real estate agents. So they're going to become
Your call keeps fading in and out. Do you have a better connection? We'll move on to someone else. Okay, we'll mute you for now. Let's go to Helen Gonzalez Crawford.
Yes. Okay, maybe I can ask the question that she was going to ask as a real estate agent. If we become agents with fundmyhome.org, does that mean that we have a nationwide license where we can work in all states and get paid a commission under your umbrella? Because as an agent, we have to be licensed in the state in order to receive a commission. So I'm just kind of a little bit unclear about how the program is kind of going to be structured for realtors. Thank you.
Okay, well, thank you. Very good question. Very creative question. So let's see. Let's say that you were an associate member, not a real estate agent. Then we couldn't pay you a commission because it would be illegal for you to receive it. Nothing will happen to us, but you will go to jail. So in order to receive a commission, you have to be licensed in the state that you originated the transaction. Now, with being licensed in a particular state, you will get your full real estate commission and also receive a fundmyhome.org marketing fee. If you are not licensed, then you're not going to be able to get a real estate commission, but you do get your marketing fee and your overrides, and the entire compensation plan takes place. So you could decide to license yourself all over the country, but it's really not necessary, because we're not advising anyone here to go and get licenses all over the country, because it's not necessary. But for the people who are already licensed realtors in a particular area, you bring your customer, you get paid a full commission.
All right, thank you. Let's go to Helen. Helen Ford.
Yes, hi. 2 questions. So I'm a licensed realtor in Texas. My first question is, with the USDA program or product, I refer my client, and once that client is approved and we close, I get my real estate commission and my marketing fee at that time. So has the original program been changed to reflect the same payment structure, or is the existing program or the original program remaining the same for realtors?
Well, let me answer the question the same way because I'm not sure that I got the right question. But if you're licensed, you will get paid the full real estate commission and receive your FMH marketing fee as an associate member. But you have to be also an associate member. So to be an associate member is very easy. You simply sign up under the person who invited you, and it's only $49.
Okay, let's go back to Mauro. Go ahead, please.
Hi, this is Mauro again. I live in Utah. I was wondering if there is any lots available in Utah to build a house, or do we have to wait some time?
I'm sure there are there's lots all over the place, every state, every city.
Okay, we have a couple more to go. Kathy Persall, your question, please.
Yes, I wanted to know when I went on the website, as far as uploading the client's documents, they would be uploading their financial information, and I don't know which hub it is that is going to be receiving it on the other end. As an agent, I have a fiduciary duty to make sure that my clients are not going to be, that their financial information is safe. Who is on the other end that is receiving the financial information and statements and all the documents?
Okay, well, that's a different question, but we could talk about it outside of here, but it's simple. You are sending it to fundmyhome.org. And when you say that you have a fiduciary with your client, what does that mean? Are you a mortgage broker? How are you involved with the mortgage transaction? But you don't have to answer the question because this is not topic specific.
Okay, we have one more caller, Adrian Gorham. Go ahead, please.
You've already answered my question. It was regarding the 38-year loan. It seems as if it's to the disadvantage of the customer to try to refinance. So thanks for that information. I appreciate it.
Thank you, Adrian. Let's get back to Lawrence Bond to close us out. Thank you, Carlos.
Thank you.
Gonna find him on the list here, and I'll get him right up. All right, there you are, Lawrence. Sorry about that.
All right. We got a full house tonight, so I can understand
Yes,
it's hard
we
to find
do.
us. Okay. All right. Well, guys, I just want to say, again, thanks for being on the call tonight. And I really want you guys to recognize that when this thing got started, Carlos really has a vision and a goal to simply help home ownership for everyone. In the short time I've been here, as I mentioned earlier, I've seen such enhancements that's bringing us closer and closer to that 1 million families in the next 30 years. And I know that Ken, myself, and Charles are dedicated. We're here to help you any way we can. And together we can really start a housing movement. And now we have the momentum. Now we have all the pieces in place. So it's simply up to us to say, okay, let's make it happen. Let's brand fundmyhome.org. So I really want to thank Carlos for taking time tonight and spending some time with us, explaining the program. And guys, anything that you hear for the first time has a lot of moving parts, but it's going to get synthesized. It's going to become very simple. And again, we're not eliminating the original program. We're simply giving additional opportunities for potential homeowners so we can reach our goal. So this is the year to get branded. When we have that get together in December, we're going to really shake up the world in the real estate market and just in the market of home ownership by announcing who we are and what we do, and we'll have the track record to support it. So this is the time to really start to build your organization. Get the word out, use your doodle, whatever tools that you choose, let people know what we're doing, because again, we're all here to make a difference. And especially with all that's going on at this moment in time, and we all know we're going to get through it, we have light here. We have something that's great. We have something that talks about abundance, prosperity. We're going to give families hope that prior to coming with us, they may not have had a chance for home ownership. So we're doing good. We're doing something great that we can all be proud of, that we participated, as I like to say, at making the world a better place since we arrived and before we came. So with that, let's load up everybody next week on our overview calls from Monday to Thursday. Let's let everyone hear what we're doing, and together we're going to make it happen. So once again, Carlos, thanks so much for taking time and being here, and of course, Charles and Ken and myself. So I'll just turn it over to you, Ken, to send us home.
Great. Thank you very much, Lawrence, and definitely thank you, Carlos. The information is invaluable, and I'm very excited about what's about to happen once we get everything in place. So I'd just like to close out and let you all know that this will be on the YouTube channel tomorrow morning, as well as on our Facebook page, which is FMH Associates. You need to put your name and your ID number in order to become a member of that page. And that's it for tonight. We'll see you back here Monday with your guests, your new associates. Have a great weekend.